So hello and welcome guys to my YouTube channel Rahul FX. So today we will be discussing about three topics. First is, as you can see, how to read the trend. I'm getting a lot of comments on people asking how do you read the trend and all that, how you trade higher time frames. So that will be the first topic. Then second will be what is market structure and what is it used for. So many people don't understand what market structure is used for. So that will be the second point. And third point is what are swing points. So this is also an important topic. Swing high, swing low. We'll be talking about that also. So the first, as you can see, is how to read the trend. So we'll start with that. So as you can see, I have marked out. So now there are three types of trends. One is uptrend, as you know, higher low, HL, indicating bullish movement. So I'll give you a quick example with the arrows. Then I will show you in the chart also. So the first I'll mark out the higher low. So as you can see, this is the higher low and this is the higher high. So the higher high will mark with blue color. As you can see, first, whichever is the highest point before a market structure, that is called the highest point, and this is the higher low. So now, once this point gets broken, this point will become the higher high, this point will become the higher low. So, as you know, this will become the higher high, this will become the higher low. Is it? It is as simple as that. So, this is the uptrend. Now, we do this. I will just keep it straight. Now, the second is what is a downtrend, which includes lower lows, lower high, indicating a bearish momentum. So now, as you can see, the blue line will be the lower high, and the red line will be a lower low. So now, once the trend is continuous, as the trend breaks the recent lower low point, then this becomes a lower low. Then the point which broke that, this becomes the lower high. Always the lowest point will be called the lower low, and this and the bullish momentum, the most recent high will be called as higher high. So now as we it will break it, this will become the lower low, this will become the lower high. So this was the two type of trend. Now the third one is a sideways consolidation, in which the price moves within a range without a clear indication. So this is a, you can say, consolidation. As you can see, this market will be called a consolidation. But if somebody says that you need to find the trend of the consolidation point, you can mark there also. So you can just, let's consider this higher high, and let's consider this higher low. So use my knowledge. So now as this point is broken here, this will become the higher high, then this point will become the higher low. This point will become the higher low. Then we wait for any of this to get broken. As you can see, this gets broken. So now the market structure will shift. Now it will become bearish. This will become the lower low. This will become the lower high. We need to wait for again it to break. Then as it gets broken, this will become the lower low. This will become the lower high. Then again, we have to wait for a break in structure. As you can see, this becomes the higher high, this becomes the higher low, and as you can see, now it had in break. Now, neither both of the points have been broken. So this will be called as market structure. So what means market structure? I will give you a quick tip is any point, let's say this is the higher high, higher low, this is the higher high, this is the higher low. Any point in the between of the recent high and the low, like if the market is doing this, Like if the market is doing this inside the price point, this is the recent high, this is the recent high low. So until and unless one of them gets broken, this is called a market structure. Okay, don't get confused in the three types of trend. As you can see, I have explained what is uptrend, downtrend, sideways consolidation. So yes, the the moment I explained was very simple. Now, once we get to the charts, it will become a little bit tough for you. So stick to the video. And if you have not watched my previous videos, I highly recommend go and watch it. I've explained everything. So now the second is what is market structure and what it is used for. As you can see, why is market structure important is it helps trader identify the current phase of the market. So what does it mean? That it means that in which trend the market is following. Like the I had explained here is like let's say this is a high. So now until one of them gets broken, it is a market structure. It is called a market structure because it is like it gets used to predict the future point. So like if the market structure inside the point is doing this, it is creating lower highs, but it has not broken the previous low. Now you know the market is going down. So this the second point it helps is future price movements. This is called market structure. Then the third is it provides a framework planning entries, exits, and stop loss. So let's say this is the market you are trading now. In order to find where to put your stop loss and all that, you need to calculate what is market structure. So let's you take a sell trade over here. Sorry, this is daily time frame. So mm, so now let's say you put it here. You put it here. Yes. So let's say you take an entry over here. Now so say let's say this is the market structure. So now if you are entering in the market structure, your stop loss must be in the previous market structure and your take profit must be here somewhere. So this is the entry point. Like it helps you to figure out where you must enter, where you must put your stop loss and where you must put your exit. So many traders what they don't do is like they make an entry, then they put the stop loss also, but they fail to put their take profit in a proper zone in which they can either exit the trade or put the stop loss in break even. So this is a must. So you need to understand what is market structure. This is very important. So this was the second point. Now the third point is what are swing points. So we can see swing points are peak performed by price during a trade. Swing lows are valleys performed by price during a trade. Like which is the highest point in which a trade was trending. So I'll show you one trade. So let's say this is the market. So let's say this is the market. Okay. So now the swing high will be the recent high. So the recent high, if you can see, this is the high. This is the high and the recent, this is the low. So these are the swing high, swing low. Now this will get unchanged until one of these gets broken. So as you can see, this gets broken here. So this becomes the recent swing low and this becomes the swing high because it had broken this previous point as you can see. So yes, so like every high which breaks above the previous high is not called a swing high. Swing high is basically peaks performed by price during a trend. During an uptrend, the highest price that is called a swing high, and during a downtrend, the lowest point is called a swing low. As you can see, values formed by price during a trend. This is the peaks. So yeah, this was the swing high, swing low, swing high, swing low. The lowest point. You can't just take any point and say this is the swing high or swing low. Okay, you need to find the highest price. Now I will show you all this in a chart, so it will help you understand better. So first we will start with how to identify trend. So you can see how to identify trend in weekly, daily, 4 hour. So this is I will just teach you in daily only because it is like Whatever the candles is here, you can just jump onto the lower time frame and calculate it there. So you can see first, what you need to do is take a trend line, mark it here. One you need to put it black, next you need to put it different color. So let's take it out. So now we will not be going behind here. We just take the reset high. So let's say this is the higher high, then this becomes the lower low. This become even take this point also any point is valid. So we need to wait for any of them to break first. As you can see, this gets broken first. So now the point that broke this becomes the recent lower low, and this becomes the lower high. You can take this point also, but this point there is not a lot of pullback. So now we need to wait for any of them to break. As you can see, lower low gets broken, so this becomes a new lower low. This becomes a lower high. So once I need to show you that if a point get broken, let's say this point, as you can see, this point was broken by this point and made a new lower low. So previous lower high was this point. So now you just can't take this as a lower high. The point which broke, like a point which gets broken has to have a lower high here only. You can't just take the previous lower high. So once the lower low gets broken, lower high also has to change. And keep that in mind, because many of the people, if they mark the lower low, they keep the lower high somewhere here. No. A point gets broken, then it has to create a new point also. So now as you can see, the lower high gets broken. So this becomes the higher high, and this becomes the higher low. This means the higher low gets broken. This becomes the lower low. This becomes the lower high. Now none of the points have been breached yet, so this is called a market structure. In this point, if a candle will close above here, then it will become a bullish trend until and unless it is a bearish. Okay, until and unless these points get broken, we will be looking here for sell opportunities. Like let's say here, if the market comes, you can take a sell in the retest. So I will not be talking about my strategy today, just I will be explaining the trend and all that. So first we understood the trend, then now I explained you what the market structure also. So let's say this was the point. So I had explained that this is the trend. So until and unless if a candle close above this, whatever is inside the highest point and the lowest point is called a market structure. Let's say the candles are doing this, they're dancing. Until and unless both of them, any of them gets broken, it is called a market structure. So until and okay, that I'm explaining it as simple as possible. If you have any doubt, you can contact me in my Instagram or even leave a comment below. I'll explain it to you. So yeah, this is the simple market structure. Until and unless any high or low gets broken, whatever is inside the trend, that is called market structure. That is the most simple explanation I can give. So the next, last and final thing we'll learn in the charts is what is a swing high and swing low. So now if you want also get competitive, you can take a screenshot here and you can mark yourself which is the swing high and swing low. Yes, I will be saying you. Highlighted. So in the uptrend, the most highest point is called a swing high. So this will be the swing high. And in the downtrend, the most low point will be called a swing low. This is a swing low. Then after this trend, this will be called a swing high. This will be called a swing low. Until unless like we in while we are identifying the trend, if you had noticed, if we create a lower low, then we have must create a lower high. But in the marking the swing high, swing low, we don't need to do that. We just need to mark the highest and the lowest point. As you can see, this is the highest point, this is the lowest point. Then after this point, after this trend confirmation, this was the highest point. So this will become the swing low. Like now in this, in identifying the swing points, you don't have to compare which is higher and all that. You just need to mark the highest point and the lowest point in a trend. As you can see, this was the downtrend. We mark the lowest point. This will become the swing low. Okay, this is as simple as that. So if you want to take this trend, let's say we take this trend. So in the uptrend, this will become the swing high. In the sorry, in the downtrend, this will become the swing low. Then uptrend, as you can see, this can or cannot be, this will become the swing high. So yes, we will be reading like this only. It is as simple as that. So in this video, we discussed what is how to read multi-structure, what is multi-structure and what is it used for, and what are swing points. So yes, and that will be all for this video. In the next video, I will try to bring my simple price action strategy. If you want that, please leave a comment. Just thank you so much guys for watching. Bye bye. Take care.